If you do like paying taxes, go ahead and write a $10,000 check to the Department of Treasury, put it in the mail. I guarantee they'll cash it. But if that doesn't sound like your cup of tea and you're actually interested in the opposite, then we need to talk about R&D. The R&D tax credit is one of my favorite because it is something that sophisticated companies are already doing. It is an established credit and one that Congress wants you to take. The question that we ask ourselves then is, how can we, without the benefit of administrators and lawyers and tax specialists, do this same credit at our level in small and medium-sized businesses? That's exactly what I'm going to talk about here in this video, and I'm going to give you some simple tools to understand and analyze your own R&D activities. Okay, so first, let's recap quickly on what the R&D tax credit is. It was established by Congress originally in 1981 and became permanent in 2015. This is a credit that is supposed to encourage a certain type of economic activity here in the United States as opposed to abroad. So it's an incentive credit, meaning Congress wants you to act in a certain way in order to realize that benefit. The credit can be claimed on all open tax years, meaning that you can go back federally 4 years, and depending on your state, you may be able to go back farther. So if any of the analysis here works on even prior years that are already filed, you may have an opportunity to go back and claim that credit retroactively. And then lastly, where does this credit show up? This is a credit that was made not just for profitable large businesses that have tax liability, but also for startups. And the way that startups take this credit is you can take it as a payroll tax. You can take it as a payroll tax, a corporate income tax, or even at the personal level as an individual income tax credit. So there are a few ways to take it, but the point is that you can be an individual, a business, a startup, and still have the ability to claim this credit. So don't rule yourself out because you might not be profitable. The other point is that this credit rolls forward. So even if you're not profitable this year, the credit that you build up can be used in future years when you are profitable. And a handful of our clients do enjoy that feature for startup companies. Next, we'll want to define how to meet the IRS's definition of R&D. The number one bridge that we're trying to cross when we first start an engagement is, how do we reconcile the definition that your company has on what is innovative and research and what the IRS's definition of R&D is for purposes of calculating the tax credit. And to understand that, let's take a look at the IRS's 4-part test here. The first test that we're going to approach is the elimination of uncertainty. And what we're trying to do here is we're trying to meet two main criteria. The first being that the research is intended to discover information that is not available today to the taxpayer. Okay, we'll break that down in a second. The second is that the activities are expected to eliminate uncertainty either about the capability or method developing or improving the product design. Again, we'll get into what these mean exactly for your specific project, but generally what we're trying to establish is a definition of development that is concerned with the elimination of uncertainty in a particular product or use case. So when we start an engagement, we're really trying to understand is, what does the world look like without the solution? If you're talking about creating the world's ever CRM, the problem is very simple, that there's uncertainty about who to follow up with, who to reach out to, and in what sequence you should reach out to those. That's just one example of some of the uncertainty that a company may have that would be rectified by a CRM product. Essentially, what this test does is it's going to reject any cookie cutter processes or a situation where you have a recipe to solve something. So if I were to tell you this is how you increase SEO, you develop content, you use keywords, you get backlinks, that process has already been established. What we have to talk about when we address uncertainty is what are the unknowns that can be solved with technology. And we'll cover that in the technology test next. Next, we talk about my favorite, the technology test. This is also referred to as discovery test and aims to establish a requirement for innovation based on information sought using the hard sciences. Now, hard sciences, I'm putting in air quotes here because it is the exact language that is used in the Internal Revenue Code. Some examples of hard sciences: engineering, computer science, anything in bio, compounds. These are the types of scientific processes that are going to check this box. What the Internal Revenue Code and regulations also state is that what needs to be developed, and I'm quoting here, is the development of a new or improved business component of the taxpayer, meaning any product, process, computer software, technique, formula, or invention that ultimately is going to be used in a business application. What this really means for you as a client is there has to be technology involved. Research for the sake of research is not going to move us into qualifying territory. There's got to actually be some code. There's got to be a code base, or if you're designing a web application, there needs to be wireframes and a repository where that code is being stored. If you're developing a new if you're developing a new compound of some sort, whether it's a nutraceutical, we have some clients that develop tasting supplements, we're going to have to define what type of testing process we're using and the technology involved, which bring us to the third test on process experimentation. The third test really evaluates whether an established process of experimentation exists. Now, you might not have this defined and established in a README file, but most likely you do have a process. This is typically referred to as a software development cycle in some businesses, where requirements are established and tracked and tested through what we just suggested is a cycle. To cite the IRS's exact definition, they say the process of experimentation is defined as a process designed to evaluate one or more alternatives to achieve a result where the capability or method of achieving that result is uncertain at the beginning of qualifying activities. Very wordy, said a lot. Essentially what we're saying is we don't know the answer at the beginning. What is the process to validate that we're wrong or right? And those are requirements that typically are going to be stated up front. If you don't have those, don't stress. What we do is we work to document those for you and to really make sure that we're reflecting what the actual process is. If you don't have a process of experimentation, this is typically where clients can use some of our going forward feedback in working to create some of those processes going forward so that you do have a pass in test number 3. And finally, we have test number 4. Business purpose. In order to receive the R&D tax credit, these activities and testing need to create a business result. That means that you need to create what the IRS calls a business component. That could be a functionality, the ability to provide a service. SaaS is usually easy to define because you're trying to create a functionality that allows clients to get a certain outcome in exchange for a subscription payment. The business intended purpose is very clear in that situation. And if you look at the business test, there's actually 3 main components that allow it to qualify. First one is a new or improved function. Second is performance. Does it work better, faster, more efficiently? And the last is reliability and quality. We also want to be mindful that there's a lot of things that exist in the marketplace that are semi-successful. Maybe it's not 100% of the time they work. Even working on a product or capability where you're increasing the amount of certainty or probability of success constitutes a business purpose. So the last one is typically one where most of our business owners say, aha, I understand that. But again, the ones that we'll have to really focus on are going to be process experimentation as well as the technological function. If you meet those criteria, then you qualify for the R&D tax credit. Chances are, if you feel you meet 2 out of 4, 3 out of 4, you might need a little coaching and consulting to get you into a yes on all 4. What you'll want to do is you'll want to figure out how exciting and how big this credit can be for you. And to do that, we've created a proprietary calculator on our website that allows you to put in your annual payroll costs, contractor costs for multiple years to get a sense of how big that credit will be. What you'll see linked here is you'll see a link to our calculator on our website. Go ahead and click on that to get a sense of how big this credit can be for you. We hope this video has been helpful and insightful in giving you more context around this very special credit and has given you some of the analytical approaches that we take when assessing how big R&D can be. If you feel that there's R&D in your organization, we definitely encourage you to check out that calculator. And if you're thinking about doing R&D, maybe you're not meeting all the 4 tests, but you think you can, go ahead and check out our R&D calculator to get a sense of how much ROI you'll get on a certain amount of spend on a qualifying project. We look forward to connecting with you and advising you. If you have any questions or comments, please leave them below. We'll be sure to reach out. It's been a pleasure. Thank you.